Hello and welcome to ATFX's US jobs numbers preview. A bit of a mouthful, I know, but it's a massive week again for financial markets this week. We've got 4 separate jobs numbers coming up during the week. We've got JOLTs Jobs Openings. We've got ADP non-farm employment change. We've got the usual weekly unemployment claims. And then we've got the whole non-farms payrolls numbers coming out together. Those coming together could see massive changes in the prospects for the dollar, for Fed interest rate cut expectations, and for the overall US economic outlook. Before I go any further, please always remember to subscribe to our channel, and then you'll get all these updates as they come through. What we're going to do today is a very quick look at the overall US jobs market, what's been happening over the last few months. Now, the market is firmly pricing in another Fed rate cut of 25 basis points next month, and it's only a few weeks away, really. They're about 89% priced in for that at the moment. But that could change dramatically. It could change dramatically in the next few days if we suddenly see a pop back in the jobs numbers. Inflation, as we know, we got a core PCE reading last week. It came in largely on expectations. That's plus 2.2%, I should say, month-on-month increase in the core PCE, but 2.9% for the year-on-year number. That's still sticky as far as the Fed's concerned. So now the market refocuses back onto jobs numbers. So first of all, JOLTs Job Openings. That's expected to show that there's still 7.19 million job openings in the market. Obviously, anything higher than that expectation lifts job expectation numbers. Anything lower could see a hit. So it's a pretty simple trade. Buy dollar on a higher number, sell it on the lower number. We'll watch for some opportunities later. ADP non-farm. Now that's the white collar non-farm number, and it's always a good front runner for Friday's non-farm numbers. That's expected to come in at 53,000. That's dramatically fallen over, in line with non-farms, it has to be said. Over the last few months, it was very high back May, June, and then dropped off with revisions as well over the last few months. One of the key factors that we've seen influencing the Fed. The weekly unemployment claims, but they have been moving markets because there's been such a strong focus on jobs numbers. They're expected to come in at 225,000. And of course, we have to look at the big data hit that we get on Friday. It's going to be another classic non-farms day on Friday. There's not too much coming up in the preceding sessions. Expected to come in at 52,000. I should have remembered that without having to glance over there. Very close to the non-farm. So way back on the 200,000s and the 100,000 that we've had only a few short months ago. Average hourly earnings, that is a broken record. That's expected to stay steady at plus 0.3%. The unemployment rate staying steady at 4.3%. If you remember last time it pipped up. Huge trading opportunities coming up. We're going to look at the daily charts to give us those bigger levels that will put us in the bigger interest rate differential opportunity trades. And we're going to go through, we're going to have a look at sterling. We're going to have a look at euro. We're going to have a look at dollar yen. And we're going to have a little peek at gold, which has once again smashed through to all-time highs. It does seem to have a mind of its own at the moment, but it will react to this US data. So bear with me and I'll click over to our charts. So first chart we got here is cable. Now cable's got a very similar pattern to euro, but you do tend to get a lot of bang for your buck out of cable. You'll get a big figure plus if there's a difference on any of these moves as they come through during the week. So we've had a nice move. The dollar retreated, as we know, earlier midway through the month. High here, 137.14, not too far from that resistance trend line. That locks in that as a decent level on the top side. But we've based here a couple of times on this support trend line, goes all the way back down to January. 2 lows here, lows coming in 133.21, another low here, 133.26. And we've seen a decent bounce off of there. We're sitting around 134.23. Lower numbers will push us back up into this range. Higher numbers, and depends how high they are, we'll see these levels challenged. A breakthrough could take us very quickly down to that 200-day moving average at 130.135. So here's the euro chart. It was looking really strongly. We got a good break of a previous trend line. I'll bring that in here because those looking at the videos before would see. There's that break that we got during the week this week. It's popped back in. We've got a new trend line coming in, and it is providing support very similar to what we saw in sterling. Low here again, 116.45, similar level, 116.57. expect this, if we're around these levels on any of this data coming through, stronger numbers challenge those lows. A breakthrough could take us down, once again targeting these lows round about 114. Lower numbers break to the top side, a break of this level and a break of this high here, up around 117.50, could take us very swiftly back up into a higher range. Dollar yen's got a double whammy, and something we could even look at in a bit more detail. We've got the Japanese prime ministerial election coming up over the weekend. We've got a hint coming up earlier from Bank of Japan Governor Kazuo Ueda during the day on Friday. But the real move for dollar yen will be this US data. But take into account, we could see some volatility from the update we get in leadership over the weekend. At the moment, as you can see here, this 200-day moving average acting as a little bit of support after we've come off these levels around about 150. Stronger number will take us back up to those resistance levels around 150. A break there, we're looking at 152, fairly sharpish. Weaker number will take us back, and we could be anywhere in this range, I would think, over the next few days, would take us back to challenge. Support now coming in at 146, the figure. We've got support further south at 145.50. I think it's going to take us a lot to break those levels, but we could see that gap filled in fairly sharpish if the numbers come in a lot weaker. And here's gold. It's a tricky one. It has been on an absolute tear for all of September. I checked it out this morning. From this low to this high, well, actually to this high, we've gone even higher in the last few hours, 9%. Massive move up. It does seem to be continuous buyer that's coming in. So most traders are probably looking for a buy dips opportunity, and we could get that if we get stronger numbers out the US. We will see a reaction in gold. I'm anticipating the reaction for gold will not be as long-lived as what we're getting in the currencies at the moment. It does feel like there's some portfolio reallocation that's taking gold higher. I actually will remove that, which wasn't really a trend line, but there's probably one coming in around here now. There's nothing to the top side. Expect lower numbers to just take us further higher, 3,900, the next target. Expect stronger numbers to bring us back down to these levels. I would suggest these overnight lows are the next one. There's probably a line coming in around about 3,700, but gold will move, and it will move hard on this number. That's about it from me today. Thank you very much for tuning in. It could be a really big week. It's going to be massive for Fed expectations. Those numbers could really change the dial or lock us in for further rate cuts in the coming months. Thanks for joining us at ATFX.